And just a quick overview of what we're going to be covering today. We're going to go over a quick overview of match funds and what match is. We're going to talk about keeping Match Rad, and we'll talk about what Rad means in a moment. And then we're going to go over some common OIG match findings, talk about some best practices, and put your programs in the best position to manage their match the best they can. Unfortunately, I had to add this slide. We do realize that a lot of your programs may have questions related to COVID-19 and how it's going to affect your programming, and more specifically, your financial grant management of your AmeriCorps grant. Just be aware that we will have a time at the end of the webinar to cover any questions specifically about COVID-19 that you might have. So just hold those until the end. If you have questions during the webinar about match or anything related to match, you can use the chat box to ask those questions, but please keep any COVID-19 related questions for the very end. So just so we know what everyone knows how to find the chat box or to use the chat box, let's play a little game here. And I just want everyone to use the chat box to tell us what your favorite toy was growing up. I know I was a fiend for Pokemon cards, so I'm going to put those in there. There we go. People are coming in now. Got train sets from Sarah. Sherry says fishing pole. Barbie dolls. Mickey Mouse ice shaver machine. Ooh, like an Italian ice maker thing. Okay, Beanie Babies. Specifically with the Kung Fu grip, you had to have the Kung Fu grip, Matt? Okay, so it seems like everyone can find the chat box here, knows how to use it. So like I said earlier, use that chat box to ask those questions during the webinar. Johnny will curate them, and then we'll answer them at specific points. And hopefully you got to learn a little bit about your fellow youth builders around the country here. Okay. Okay, so let's go over just some basic concepts that we're going to talk about a lot. You're going to hear us say words like RAD and ARR. And I just want to lay some ground rules so that you know what these things mean. So when we talk about RAD or staying RAD or totally RAD, what we're talking about are the requirements for determining if expenses or match are billable to your AmeriCorps grant. And they stand for reasonable, allowable, allocable, and documented. We're going to go in more detail later about this, but just know if you hear us say RAD, R-A-A-D, this is what we're talking about. Additionally, you might hear us say ARR a lot, ARR or FSR. And ARR is referring to our AmeriCorps reimbursement request, which is the full packet of things you submit to us monthly in order to get reimbursed for your grant. And this includes things like the FSR or financial status report, your match worksheet, your expense worksheet, and a number of other things. So just know when we say ARR, we're specifically talking about your AmeriCorps reimbursement request. So first things first, what is match? So federal grants of all kinds require grantees and subgrantees to bring money to the table to support the work that the grant is designed to do. The money that your program is bringing to the table is called match. There is a couple other names that it could be called. You might see it referred to as recipient share or subgrantee share. But just know at any point, if you hear any of these things for any of your grants, it's just referring to match. The point of match is to make sure that your programs are not fully reliant on federal funding for their programs, and in order to expand and build upon the foundations that you're able to build with your federal dollars. All federal grants require some, or most federal grants, I shouldn't say all because I'm not entirely sure, but most require some form of match, and they are varying in different amounts of how much that match is. So just know for your AmeriCorps grant, it is a one-to-one match, meaning for every dollar of expense, you need to bring $1 of match to the table. We like to think of this as 50% of your total grant is made up of your CNCS or AmeriCorps operating funds, and 50% of your grant is made up of recipient share, or match. Those two 50% make up the full 100% of your AmeriCorps grant. So match can kind of be split into two buckets, kind of two extremes here. So the first bucket we'll talk about are cash gifts. So cash gifts are made up of personal donations or foundation grants. Sale of goods or other income generating activities can fall into cash gifts, even though they're not technically really gifts. Corporate contributions or corporate grants, and of course, public or state appropriations. In-kind gifts are a bit more nebulous. They can fall into a bunch of different things, but generally they fall into 5 big buckets that generally would be applicable here. And those include training, vehicles, equipment, and property and/or space, and services. And in-kind gifts are simply just donated goods or services that you are being given to by individuals or organizations to help provide support for your programming. So when you're budgeting your AmeriCorps grant, you're going to have to choose what match sources you're going to use. Not all programs have different match sources available to them at different times, and choosing what match source can be a little difficult. It's hard to, you might have more dollars than you need to match your grant, and in order to pick which ones to use can be confusing. So let's go over just some quick pros and cons of cash and in-kind gifts. So pros of cash gifts are that they're generally easy to manage. They can often be unrestricted, meaning that they don't require any extra grant management on your end. You're often already doing most of the accounting work to track these funds anyway. And their allowability of match is often unquestioned, meaning that as long as a grant or cash gift you receive isn't explicitly not allowed to be used as federal match, it most likely can be used. So some quick cons, the big one here is that federal grants are not allowed to be used as match. This includes youth-build ULL, as I'm sure you're all aware. We've been stressing this a lot over the past couple of years. One thing that can be tricky is that state grants can often be federal pass-through money. This is often found in State Department of Labor, State Department of Education grants can often be coming in through their federal counterpart. So if you are using a state grant, you just want to make sure that that grant is not federal pass-through money in order to ensure that it can be used as a match source. And very rarely, this doesn't happen often, I've never personally seen it, but private grants can occasionally restrict their ability to match federal awards. Sometimes organizations that give money to nonprofits don't want their money to be used to support federally funded activities. Like I said, this isn't necessarily common, but just something you should be aware that you need to look out for. So let's talk about some pros of in-kind gifts. So a lot of your programs might have existing relationships that can be formed into official in-kind gifts. What does this mean? Some of you might have had people from your community or personal contacts from your program that come in and provide services to the young people that you're serving. This can be construction training or education requirements, or even things like CPR training from local nurses. A lot of these relationships can be formalized into official in-kind gifts. And we'll talk a bit about what you need to do in order to have something become an actual in-kind gift. Another pro of in-kind donations is that you can often acquire these through community outreach. Sometimes a bit easier than having a grant writer apply for a big corporate or foundation grant. What does this mean is that you can you can go out into your community and say, hey, we need lumber, we need this, and you can kind of get those supplies you need from your community in order to do the service that you need to do. So let's talk about some cons here. So the big con is that in-kind gifts are often held under a much higher level of scrutiny by auditors, both your financial auditors that are going to be coming yearly to you, and also CNCS itself. They do consider it a considerable amount of additional work to manage. They're not quite as simple as a cash gift. They require some extra accounting and some extra documentation requirements. And that's repeated there twice. So good job, me. So you might be saying, hey, I don't really know if a gift can be used as match. I'm unsure. Sometimes we have our programs ask us, hey, is this allowed to be used as match? So we can infer to the best of our ability whether or not you're allowed to use a gift as match. We can do research and we can look up online if an institution is using federal pass-through money or if they are not. But as I said earlier, the quickest and easiest way to figure out if a gift you have is allowable to be used as match is to just ask the grantor or gift giver. They will be able to answer you almost immediately if their grant is allowed to be used as federal match. They'll know this. This is probably a question they get fairly often. And it will leave you kind of stress-free without any doubt about whether or not you can use that money to match a federal award. With that, does anyone have any questions about this first section? Take a couple of minutes here, give everyone an opportunity.
It doesn't look like we have any questions at the moment.
Okay, don't be shy, people. We're here to help. Okay. Well, I suppose we'll move on then. So now we're going to be talking about more about the specific concepts I had mentioned earlier, and we're going to talk about keeping Match Rad. So the big thing to take away here is that match requirements for everything related to your AmeriCorps grant are held to the same standard as your AmeriCorps expenses, meaning that you shouldn't have changes in policy or procedures between how you're treating your match funds to how you're treating your AmeriCorps expense funds. So this means all standards and practices need to be applied equally to both sides of the grant, which of course means that match must be RAD, which, as I said earlier, means reasonable, allowable, allocable, and documented. So let's talk about reasonable. So there's an easy test to determine if a cost is reasonable. We call it the prudent person test. Some people call it the sniff test. There's a lot of different things you can call it. But basically, there's three things here that need to make sense for a cost to be determined as reasonable. It needs to be ordinary and necessary. It needs to constitute sound business practice, and it should not deviate significantly from your organization's established practices. So what does this mean? This basically means that you shouldn't be going out and buying things your program doesn't need to actually operate. You shouldn't be buying luxury goods. You shouldn't be buying tons of computers that you aren't going to actually use and billing those to your AmeriCorps grant. Basically, only bill costs that actually are required for your programs to operate to the best of their ability. And of course, this does also apply to in-kind donations, right? So this can be a little tricky because you're not necessarily controlling what comes in when you receive an in-kind donation. It's being donated a good, and you kind of have to deal with what you have. So there's three easy questions you can ask yourself to determine if an in-kind donation is reasonable. So the first of those questions is, would you have purchased this good or service if it were not donated? Would you have purchased lumber? Would you have purchased tools? The answer to this is yes, but you would not purchase a refrigerator or a floor buffer, right? You wouldn't purchase these things. So those things would not be billable to your AmeriCorps grant. So again, you need to just apply those donated goods to the prudent person test that we asked before. So basically, would a reasonable person buy those for a nonprofit to operate? And this next one is important because if not, is there a comparable item that does? And what does this mean? This means that if you're donated, let's say, a luxury good, like a very expensive set of tools or very expensive computers, these are things you would necessarily buy for your AmeriCorps grant or for your AmeriCorps programs to operate, but not necessarily in the form you were given, right? You wouldn't buy a luxury good. So what does this mean for using InKind as match. It means that you can take the cost of the items that you would necessarily buy and use that cost as an InKind donation, even though the cost of the good you are actually donating vastly surpasses that. The easiest way I think to think about this is personally think about expensive laptops versus the normal laptop you would normally buy. You wouldn't buy a $3,000 laptop for your program, but if a laptop were donated to you that was $3,000, you can instead go to the laptops you would normally buy for your young people to use and use that cost, and you are able to use that cost on as a match for your AmeriCorps grant. Next up, we're going to talk about allowable costs. So again, all standards are equal between expense and match, and this means that expressly unallowed costs for your expense side count for match, and this includes alcohol, clothing not explicitly for service, entertainment, late fees, gift cards, and food for service events, or food in general, rather. The one exception for food, of course, is water, which you are allowed to bill. Water for service events. So just some tricky things that are sometimes allowable are advertising and overtime pay. We'll go into this very quickly. Advertising is explicitly unallowable in almost every circumstance except for costs directly related to recruiting members, specifically members. So not staff members, not young people for your program that are not going to be AmeriCorps members. Only advertising explicitly for recruiting AmeriCorps members is an allowable cost. Secondly, and much more rarely occurring, are overtime pay. The one trick with overtime pay is that it needs to be approved before the cost is incurred. This means that before the staff member that's working overtime actually works overtime, you need to get those costs approved from us. And if you don't, you're not allowed to bill it as match or expense. So again, allocation, your cost allocation plan that you use to spread costs over multiple sources must be applied to match the same way that it's applied to your expenses. Ideally, you should be using the same exact cost allocation plan for all of the costs that you grant, but just know that if you are needing to allocate a cost that benefits multiple funding sources as match, you should use the same standards that you split those costs on the expense side as you are on the match side. Which brings us to documented. Documented is a big important one because this is how you actually prove that you met all the other requirements here. Documentation is important as it lets you it frees you from any risk of being audited or being tested through IPERIA from CNCS in order to make sure that you aren't at risk of repaying any funds back at any point after the grant year. So all the same documentation requirements exist for expense and match, meaning that the same things that you're keeping for the staff, such as timesheets, receipts, or timesheets and pay stubs, have to be maintained for their match sources as well. Every expense, everything you buy that you're billing to match has to have invoices, receipts, all those proof of payment, all those things, and any sort of workshop or training that you do has to have sign-in sheets and proof that your members attended those trainings. Now, we're not going to go over every documentation requirement. We do have things online from our past AmeriCorps management conferences that you can check to look up all of the documentation requirements. But just know that you shouldn't be maintaining this documentation any different between match and expense. And this means file keeping as well, meaning that you're required to keep all of your files and all of your documentation on site for 3 years after the close of the 3-year grant cycle. And after that point, you can keep them, you can get rid of them. However, just know that you're required to keep all this documentation on site, readily available, because at any point an audit can happen or anything like that. So this, of course, also is attributed to in-kind gifts, right? So they need to be documented as well. And there's a couple additional things that you're required to are required to keep in order to prove that an in-kind contribution is valid. So there's 5 key facts here, or 5 key factors that need to be documented in order for a in-kind gift to be provable as RAD, right? So you need the date of the donation, the valuation of the donation, more specifically how you came to that valuation if it's not a value directly given to you by the donor, the location of the donation, description of what the donation is, and then of course the donor's name and signature. We provide you with an in-kind contribution form, which you can see here. And that's essentially just a form you can use in order to track all of these things and in a quick, easy, concise way. You have access to this form in your Dropbox, but just know if your programs have their own forms or own tools they use in order to track in-kind contributions already, and they do cover all these necessary factors that you need to keep track of, you are able to use your own program's tools. However, just know that we do provide you with one that you are free to use if you wish to use it. A quick little tip about valuation, it should just be either the cost of the actual good itself, meaning that if you're donated a specific table saw, you can look up how much that table saw costs, and that's the value of it. Or if you can't find this specific item that was donated, such as, let's just say 100 2x4s, you can look up what the fair market value of 100 2x4s is and use that valuation. So let's talk a little bit about budgeting Match here before I pass things along to Brandon. So quick thing, all Match must be in your approved budget when you submit a budget to us at the beginning of the grant year, that you are going to list your match sources in the budget itself. And they are also approved by us along with all the other parts of your budget. Now, you need to remember to label and categorize these to the best of your ability, meaning please show, as you can see here, if it's in kind and all that stuff. You should use as much information as you possibly can. For example, don't name the source as quote unquote state grant. If it's, for example, a State Department of Education grant, you should put State Department of Education, or even better, State Department of Education, and then the name of the specific grant that you are given. Additionally, for purpose, we sometimes have folks put in here things like very specific things like supplies, which is great, but sometimes they will just say match or something like that. Just use very specific purposes, meaning that if you are paying 3 staff members salaries with your State Department of Education grant, you should list those staff members in the purpose section. Or if if it's just used to bill fringe or just service supplies, we just want to see as much data as possible in this section, so we understand to the best of our ability what you are using as match. One other thing that sometimes tricks people up is that if you're using unrestricted funds, meaning that it's a pool of funds that's not coming from one specific source, but they are unrestricted, so they don't require any extra work on your end, you should just put unrestricted funds or something similar to that, and that way we'll know that you're just using your cash that you have to freely use to match the grant. If it's a specific grant that is unrestricted, meaning if it's from a foundation and they give you the money and it is unrestricted, we still want to see that it's from a foundation, however. And one last thing here, that if you are at any point going to add or change your match sources, let's say that you receive a new grant in the middle of the grant year and it makes more sense to use that as a match source, then it makes sense to use the one that you originally thought that you were going to use when you had budgeted the grant in the previous August. You can change your match sources mid-year, but just know you will be required to do a budget modification, just like you are required to do for any changes you make to the expense side. And finally, let's talk a little bit about reporting Match. Match is reported along with your expenses during your monthly billings. As I'm sure you're aware, this means that any match you incur during the month that you're reporting to us, you have to report that match in your Match workbook along with your expense on the expense workbook. One thing that does sometimes trip people up and we sometimes get questions about, so it does not need to be one-to-one for every month. For example, that if for March 2020, you submit $1,000 in expense to us, you are not required to submit $1,000 for match in that month. The spending doesn't have to line up perfectly month to month. The only important thing is that you meet your match requirement at the end of your expenditure period when you close out your grant. You have until 30 days after your last member exits to submit to us, and that's the date where your match has to line up one-to-one. You have to match every dollar of expense that you bill to us. Don't worry if for example, early in the grant year, you've spent $3,000 more than you've matched. That's perfectly normal and how most of our programs will find their spending goes throughout the grant year. Not every program is going to bill match relatively over the grant year, the same as another program. And the last thing here is just remember to break down your match monthly in your match workbook. This thing at the top here is from your match workbook, and you can find it at the bottom. And this is where you're going to just break out every month's spending between match sources, meaning let's just say in August 2019, this program billed $3,000 in match, and they were $1,000 each to each of these three match sources here. We would want to see in August $1,000 in the State Department of Education, $1,000 in the Free Money Fund, and $1,000 in the Matt Fisher Foundation. So just know that it's an easy step to forget, but just know you're required to break it down monthly. We do report your match sources yearly, so it's a useful tool for us in order to know how our programs are spending their match. And with that, before I hand it over to Brandon, we're going to go back to questions.
Doesn't seem like we have any questions right now.
Okay, that's fine. So Brandon, do you want to take things away here?
Sure, thanks, Michael. All right, so for some additional context around key match compliance concerns, I'll provide an overview of YouthBuild USA's most recent completed OIG audit. I've been sharing this 2005 information for a number of years. There is another audit in process. It's currently winding down. It's in the final stages. So eventually we'll have some updated information. But I can say that match remained a key concern in YouthBuild USA's recent audit. So here we have the 2005 audit and some information regarding the scope of the audit and question costs. So it covered the periods of 2001 through 2004, concluded in 2008. Auditors spent 5 weeks at YouthBuild USA, as well as visiting 5 subgrantees. Out of that audit, there was a total question cost amount of $6.5 million. So this shows you the scope of the audit. It covers a lot of documentation over a 4-year period. And it takes a considerable amount of time on behalf of YouthBuild USA, as well as subgrantees who are selected for the audit. So after those 5 weeks of on-site auditing and probably years of waiting, YouthBuild USA receives the list of question costs. And CNCS guides us through the audit resolution process to come to a final repayment amount. And you can see this here, that $106,000, of which there was a total disallowed cost payment of about $72,000 and then $34,000 in the education award. Here's a more in-depth breakdown of that $6.5 million in question costs. As you can see, match makes up a significant portion of the question costs. And I would say this is the case for a lot of organizations that undergo an OIG audit. Match tends to be an area of focus. So Here's the golden rule for an OIG auditor. Go ahead and type into the chat box if you guys can finish this statement. So if it isn't documented, blank. What's the golden rule for auditors? Yep, looks like you guys got it. All right. So if it isn't documented, it didn't happen. And they love to tell you this. So, and this can mean a number of things. It could be it's not in the approved budgets. Maybe it's not recorded in the general ledger. Maybe you simply don't have support documentation, or in the case of in-kind donations, maybe you don't have donor support documentation. So the headline here is that match needs to be verifiable in your records. It should tie penny for penny to what has been provided in your monthly AmeriCorps reimbursement submissions. So how this would play out in an audit, let's say you have a finding that's as simple as missing documentation, and this can lead to a deeper investigation and larger question costs. So the consequences here, auditors can question the unsupported match. If you can't find or dig up the supporting documentation, you can certainly disallow the match funds, but the other consequence is that they could also disallow federal funds if that puts you under the 50% match requirements. So an example here, let's say there was $10,000 in question match costs that were then disallowed. That would mean you would have to pay back $10,000 of federal funds as well. Another consequence is that audits require significant time and efforts to confirm the match. So if there's not already a easily verifiable audit trail and it's not supported by policies and procedures, you can certainly expect to spend a lot more time supporting those match expenses. And finally, the corrective action. You want to record all claims match in the accounting journals. You want to make sure the match is included in the budgets and you have appropriate support documentation. And this could mean in the case of in-kind that you create a form which donors could provide that support. So let's go through some examples of common OIG audit findings as they relate to match. So first and foremost is using other federal funds as match. This also goes for state grants that are federal pass-through dollars, such as WIOA. The other big federal funder in the Youth Build world is obviously Department of Labor. But I'm sure most programs know by now that there was an exception for DOL as match in the past. But recent guidance from the Employment and Training Administration, I believe in 2018, said that funds can no longer be used as match for AmeriCorps. In any event, federal sources would need an explicit approval from a program officer or on an official letterhead saying that the funds can be used for match for AmeriCorps. Unreasonable and excessive. So this goes back to reasonable and the prudent person test. This could be a large purchase that is outside the scope of the grant. So perhaps someone puts on let's say a live performance as an in-kind donation and they say it has a value of $50,000. Or let's say you receive a donation of some type of equipment. Let's say you really want to get that floor buffer that you wouldn't normally purchase using grant funds to support the work. So as Michael mentioned, if you wouldn't use grant funds to purchase, then you shouldn't be counting those donations as match. Not in the approved budgets. So hopefully this is an obvious no-no, and this isn't likely to happen. Nothing should be billed or claimed as match until it has been approved by your AmeriCorps fiscal manager. And your monthly match report is then tied to your most recent approved budgets. Another common finding is that costs were based on estimates rather than actual costs. So an example would be allocating costs during the budget process, but then not actually having a process to track those costs as they are incurred throughout the grant year. Another common finding is match expenses that were incurred outside of the grant award period. So remember the 30-day rule. This applies to match expenses as well. So the expenditure period is 30 days prior and 30 days after active members are enrolled. So make sure you're reporting match within this period. Another problem is if cash or in-kind sources are not verifiable in your records. This could mean there's no support documentation for your cash sources, but this also applies to in-kind donations in cases where there's not after-the-fact documentation. One scenario is that you may have in-kind commitment letters from partners, and these letters are to ensure the commitment while you're accepting AmeriCorps funds and building your budget. But once the in-kind is actually received or the services are performed, there needs to be the appropriate documentation that details the transaction and the value. So this just goes back to the in-kind contribution form that Michael mentions. So in-kind is held to a higher scrutiny and requires a bit more documentation to support the valuation. So if you're taking advantage of in-kind contributions, you'll want to establish those internal protocols for maintaining that documentation and tracking. This could mean, collecting written correspondence with the donor and any and all donation forms the program uses to document the value. So let's go to one example. Let's say you're getting a discount. So you have a negotiated discount bus fare for your members or volunteers with the local bus company. The regular monthly bus pass is $28, but you have a negotiated price of $15. And I'll put it to the group, see if you guys can figure this out. So I'll let you type it into the chat box if you can figure out the value of this in-kind contribution. Let's say you have 75 members that are receiving this bus pass. In this case, what would be the in-kind contribution amounts? I'll give you guys a moment to grab your calculators. Yep. All right. Thank you, Sally. $9.75. So the value of the bus pass minus the discount. So $13 per pass across 75 members. So you can count $975 as the in-kind match. Another example is maybe office or meeting space, where you would use the square foot value of the office space that was determined by a local realtor, and then multiplying the square footage of the space used by your program. So 1,500 square feet, $10 per square foot equals $15,000 per year. Or you would just obtain documentation from the organization that's donating the rental space. So briefly talking about allocation plans and what auditors are concerned with, I would say a weak allocation policy is where you're allocating expenses simply based on the availability of funding. There's no written method for how these costs are allocated, and you're incurring expenses that benefit multiple programs, but you're billing it to AmeriCorps simply because it's available. A strong allocation policy, an allocation policy is strong if it's simply written and the protocols are followed, and staff have a shared understanding of these policies. So that means a written cost allocation plan. And if expenses provide a benefit to another project, in this case, DOL, that it's equitably distributed across both funding sources. And this is also to ensure that you're not double dipping claims match and reporting match for DOL, as well as reporting that for AmeriCorps. And finally, everything is properly reported in the general ledger. And this is really step one of the audit trail. If you aren't sufficiently tracking the grants, this will immediately raise some flags. So you'll want a separate general ledger, separate AmeriCorps general ledger for each grant year. And that should tie penny for penny to the monthly reports that you're submitting as part of your AmeriCorps reimbursement request. In one example, if you're wondering how to record in-kind contributions and get those into the general ledger, let's say you were donated a paint sprayer that has a fair market value of $550. You would create an in-kind expense in income accounts, put that into the books as a debit and credit, and that just becomes a wash, but it gets it onto your books. All right, so to conclude, here's a match monitoring overview. Since match may not seem as straightforward as the expense side of the grant. So for match monitoring, first and foremost is the financial management survey. We'll collect this each year and update it for grant startup. And this survey provides a space for you to describe how match funds are budgeted, tracked, and documented, as well as sharing with us your policies and procedures. Next, as part of the match monitoring process is budgeting match. So this is when the reasonableness of match is approved. So anything that you report to the grant must first appear in your approved AmeriCorps budget. And additionally, as part of grant startup, we'll also ask for in-kind commitment letters to support any of those in-kind sources that you would like to include in your AmeriCorps budget. When we get to the monthly reporting of match, so the following items are reviewed on a monthly basis as the part of the standard reimbursement monitoring process. So looking at your monthly expense and match workbook, and looking at the match reports, as well as the sources of match you're using for each and every month. Also taking a look at staff, the staff summary worksheets, which includes staff hours that are being billed to match, as well as their gross payroll amounts for that period. And then finally, the review of match documentation, which happens for the first and last month in which match is reported for each grant year. I would say your financial manager will facilitate this process. You may be starting up with your first ARR and not have any match expenses, or you may be billing some very basic supplies and will want to choose a month of match that may include staff expenses just to get a deeper dive into the documentation. All right, so before we conclude and get to questions, I'll give a shout out to the fiscal help docs. If you guys are looking for additional resources, you can always go to youthbuildamc.helpdocs.com to view our help docs. We've got a section on match if you're wanting some additional information. We'll also upload this webinar to that match section as well. So you can find our policies,